Yo.
Hello everyone and welcome to a brand new episode of Market Tape on Street Exchange. My name is Nathan Casey Nwokoro and I'm back on this episode with
Chidalu.
Chidalu.
It's great to be back.
Yeah, great to be back. But the week was not that great. It was a crazy week. Crazy week.
True.
With the global stock market tanking big time.
It was, I think it comes down to what we always say about uncertainties. That one thing investors don't like is uncertainties, and it will always play out in the stock market at the end of the day.
And we had so much uncertainties this week.
Sure.
But before we get into the conversation for the day, a reminder that nothing said on this show should be construed as an investment advice. This show is purely for information purposes only. And a reminder to subscribe to this channel if you haven't done so yet. Keep your eyes glued every Monday as we bring you a new episode every week. So it's Trump's, what did he call it? Liberation Day or Liberation Week.
Yeah.
For America. But the stock market was not liberated. And when we are in this sort of environment for investors, is a trying time, is a testing time for investors, especially because we always talk about market declines, market downturns as opportunities for investors to buy.
Yeah.
But it's easier said than done, right? And I can't even imagine, can't put myself in the shoes of many investors at a time like this, watching your portfolio lose 10% in a single day.
True.
Or in a week, 20% off your holdings.
I think okay, with Trump coming into power, I think it's something we've emphasized over and over again, right? That the market expected the tariffs. It was part of his campaign about slapping a lot of countries with tariffs. It was expected, but not to this extent.
Yeah, people didn't see this coming.
It's almost like he's on a rampage to I think someone described it. I can't remember who described it as he wants to rule the world. Just him, right? And coming off the Liberation Day, of course, everybody was expecting him to, come up with tariffs, but he wasn't even. People weren't expecting it to be this bad. And we saw him slap a baseline 10% tariff on all countries. And then we now saw higher tariffs on countries that have high trade deficits with the US. You see countries like China, countries like Europe.
Virtually every country.
About 60 countries thereabouts. Mm-hmm. And now we have China. I think currently it's about 54%. The tariff on China is 54%, which is very high. It's completely outrageous. It's completely outrageous. So I think the uncertainty is just very, I don't know how to explain it. So everybody is just sitting back and,
like you said,
what next?
The man is on rampage. And This is what you get when you have someone a leader who has a tunnel vision about a thing.
Yeah.
And in that tunnel, he has only built in a single alternative.
Yeah.
Because according to him, he's been talking about tariffs as a problem of America for 40 years. He's been talking about it. And to me, he sort of surrounded himself with people who share the same point of view. So he's at a point where it's going to be really difficult. That is my sad realization this week. That it's going to be really difficult to dissuade him and pull him away from this path. It's going to be very, very difficult because he believes so much in it. And the way he has gone about the whole stuff, I think it took everyone by surprise.
Sure.
Nobody anticipated that the tariffs would be this far-reaching and a bit reckless to me.
It's reckless. It's completely reckless. because at the end of the day, okay, now we've seen, of course, all these countries we are going to see retaliatory measures, right? So it's we've seen as at Friday, China slapped the US with I think 34%
Yeah.
tariff on Friday, and of course, we're going to see a lot of other countries start to follow suit. So it's just the whole thing it's crazy at this point, right? So back to what we were saying earlier about where investors stand. We saw that the S&P lost 9% for the week, which, like we said, is the first time since COVID, since the whole COVID in March 2020. And then we saw NASDAQ as of Friday. NASDAQ lost, I think, 5.6%
On Friday.
on Friday, and the Dow Jones index lost about 5% on Friday. So the market is reacting, which is justifiable, because at this point people are wondering what next. When these countries start to slap these retaliatory measures, what is going to happen to the economy? We're going to see impact on economy. So I mean, Nathan, like briefly, we're going to see impact on, of course, we're going to see impact on inflation, on GDP growth for the US. We're going to see these impacts. How what do you call it? How extreme do you think these impacts are going to be?
Yeah, they say that if it's not broken, don't
Why fix it? Yeah.
Yes. And I think to me, this may be the biggest self-inflicted injury in the history of politics.
Sure.
Because Trump's administration inherited a very sound economy. GDP was growing at a very high clip, around 3%. The consumer spending was very strong. And this is one thing we've always pointed to, the strength of the US economy, the healthy job market, the strong GDP growth rate, and consumer spending. I mean, the country has a GDP of about $30 trillion, So in all fairness to him, there are real issues. The US has a trade deficit of over 1 trillion with all their trading partners.
Yeah.
Other countries charge the US more tariffs than US charges those countries. These are real issues, but you do not take an issue and build a mountain out of it, which I think is what is being done today. Because the reason the US has trade deficit with this country is not just because of the tariff. It's because of the strength of the US economy. If you look at the top 20 countries in terms of per capita GDP, none of those countries, the top 20 globally in terms of per capita GDP, no single country among the top 20 has a population of over 100 million, except the US. So the US is like the biggest market in the world. And that is the reason why you have these trade deficits. It's because US is the biggest buyer in the world. It's not because of the tariff alone, to me. So if you're going to raise tariff on a country like Cambodia, Vietnam, are you suggesting that those countries will need to import from the US more than the US imports from them? Where is the capacity to do so? They simply don't have it. What is the per capita GDP of these countries? So you are basically asking poorer countries to buy more from the US. It makes no sense, and it's not going to happen. And this is why this whole tariff thing, to me, we'll just wait and see the outcome. But it's definitely going to have implications. And today, a lot of people are speaking about the fear of recession has actually increased, because for the first time, we are seeing clearly that it all looks certain that we're going to see higher inflation rates.
Yeah.
Companies, business owners, CEOs are beginning to convert back in their boardrooms to reassess the situation, scale back on projects. So to me, it's going to be if these tariffs stay, it's going to be a long-lived situation we're in. Inflation is likely to be persistent.
Okay.
If you're looking at inflation, and if these tariffs hold, then we might as well prepare for a global recession, to me.
Okay. So if we're talking about the impact on the markets, right? We've sort of highlighted the impact on the market as at last week, at least on the major indexes. We're talking about this impact. So when it comes to investors, because I'm trying to, as an investor, right, you're thinking, is this short-lived? This whole downturn in the market, is it going to be short-lived, or is this something that we should expect to extend going into the next couple of weeks?
So I'm one of those who always talk about the need for investors to, be resilient, to live through times like this. But for this week, I think personally I'm reassessing the situation, because I think this whole thing, if these tariffs stay, if it fails to back down and waits for these countries to slap the US with their retaliatory tariffs for those who have the ability, because clearly not every country has that leverage to hit back at the US. There are countries that are going to come back to negotiate. Right? And
Trump has even said, I think that was on Friday, I think, said, that the US is open to negotiations with these countries.
Subject to countries that make a phenomenal offer. We don't know what phenomenal means. So some countries are going to come back to negotiate with them, with the US, But countries like China, I don't think they're going to back down, because one, they owe their citizens a duty, just as much as Trump owes America a duty. China, Canada, and of course the European Union. The European Union has been one of the US biggest allies in years. And to heed them in this manner, would lead them to start to reassess that relationship, which is where I have issues. Because you're a bully, you think you're very strong. You've bullied everybody for years. At some point, everybody is going to stand up to you. I've highlighted the strength of the US economy. The US basically is what has sustained global economy, because if you look at what we've been through since 2020, the COVID pandemic, Russia invading Ukraine, all the Middle East crisis, and then inflation. Yet somehow the world has managed to avoid a recession. It all boils down to the strength of the US economy, because the US market has been like, let me use Trump's, a dumping ground for every country. So it's the country that has held the world up. So if countries if there's a breakdown in that relationship, in that order, then you expect some sort of structural changes. Today we are seeing more anti-American sentiments. And this whole stuff is going to rub off on companies. We're seeing disruption of supply chains globally, because you have, most American companies, in quotes, actually global companies. Look at Apple. Apple has plants in America, has in China. I think they have one in Vietnam. Same with Tesla, for instance, Nike. Most of these American companies, they're actually global companies that benefit from global supply chains and the globalization of commerce. So throwing a spanner in the wheel today would set back a lot of companies. Whether you're looking at tech space, whether you're looking at consumer staples, it's going to change the paradigm to me. So if this tariff if it stays the way it is today, then I think we're going to see structural changes in the market. You're going to see when companies start declaring their next earnings result, you're going to see companies guiding lower for Q2. In all likelihood, we're going to see that if this stays. So I think what we should be watching at this point is how all of this plays out ultimately. But I think we're in the era of uncertainties, and we'll continue to see a high degree of uncertainty for most of most of the year.
Okay. So you know how we say, I think I mentioned it earlier that investors do not like uncertainties, right? And there's something we always say as investment advisors that even as investors, right, is a staple. I don't know if that makes sense. That it's in market downturns that you buy more.
Yes.
So now, should investors see this as sort of a threat or an opportunity to buy more? Because with the uncertainties, there's a lot of confusion on, okay, is the U okay? Will the US recover from this, or will the US stock market recover from this? Which companies should I be buying? It's even hard. I mean, we can say all of this in theory, but in reality, it's very difficult
When it comes to execution.
to execution, right? Telling someone to now that the market is down like the levels of 2020, I should buy more, right? So should investors see this as a threat or an opportunity to take advantage of the downturns?
I think I will see it at this point as both.
Okay.
There are threats and there are opportunities. If you think about COVID, we knew there was a global pandemic, and we knew at some point it would be resolved and things will return back to normalcy. So it was easy. If you're thinking through the COVID pandemic, it was easy to see the end.
Yeah.
Where you are as of March 2020, it's easy to see that at some point,
the world will revert back to
normalcy. So it was easy to see that as opportunities, but in this case, it's a lot different. It's a lot different because you're looking at, as I highlighted, there are going to be likely structural changes, disruption of global supply chains, disruption of relationships. We're talking about Tesla some weeks back, and I was pointing to the fact that, Musk was kind of taking the goodwill he had built for the company for granted. People before now, we've seen a rise in some sort of anti-American sentiment in form of BRICS.
Yeah.
Now, you're toying with your relationship with the EU, with the European Union, on account of this whole tariff thing. So I think increasingly for the US economy, I think they come out of this maybe even stronger. Arguably, Trump could be right at the end of the day.
Yeah.
But it will probably take a year or so for us to see that. So for the American economy, they could come out of this whole thing stronger. Because as I highlighted, they have a big market. They have the spending power. And I mean, we expect the Federal Reserve to start cutting rates. I mean, the table is set for him to start cutting rates. So we're looking at 2 or 3 rate cuts at the end of 2025, which should help the economy get through any slowdown, over time. But at the end of the day, what I fear is that the dominance of the US economy, at this point, we may not be able to do anything about that dominance.
Sure.
Even China, because don't forget that China on its own is struggling domestically with their economic growth at this point. So if the US market gets taken away from them, I mean, most countries do not have an alternative to the US market. You export clothing, shoes. You have Vietnam exporting clothing to the US. Where is the alternative to that market? Africa, which country has the spending power pay that much? So ultimately, I think other economies around the world will be hurt more than the US economy at the end of the day. So you have to assess on a case-by-case basis, industry by industry basis, the industries that get affected the most, industries that are more, or specific companies that are more global in their operations. I think at the end of the day, it becomes a case-by-case basis. Mm-hmm. But there are also opportunities in the sense that the market will always overreact. The market will overreact where the risk is less. So you're going to find in opportunities here and there. You're going to find companies that would come out of all of this even stronger, maybe. So it now becomes a responsibility of portfolio managers, investors to spot where these opportunities are. I think that is where the work is. This is time to be more skilled at spotting opportunities. When the market is doing well, everybody is a stock picker. In the bull market, everybody is a stock picker. But this is where you get the true test of who is a stock picker and who is not. But as we always say, stick to your long-term plans.
Yeah.
If you stick to your long-term plans, ultimately you'll be fine. But of course, there are industries is going to shake up industries. And where I fear most portfolios are concentrated in tech names.
Yeah.
You may start to see, we saw the emergence of DeepSeek. China is going to be more active in exploiting this situation, identifying areas where they can usurp the US dominance in tech. So at the end of the day, the US may inadvertently be creating opportunities for other countries to emerge at this point.
Yeah. So I think like you said, investors, or whether it's portfolio managers or investors, I think they need to be more cautious. The skill is now important to look at industries, really analyze industries and look out for the ones that during this period that stand to benefit more, or that have the ability to stand the tests, the uncertainties and all of that.
And it comes down to the management team. This is a time to look at the management team of the companies that you own.
Yeah.
What is their pedigree? How do they handle challenging times? Because that is a true test of managing a business. It's at times like this that you spot outstanding management teams. So if you're invested in a company that you don't trust their management team, then it's time to reassess that investment.
True. So earlier we were talking about countries that stand to sort of lose through this whole tariff war or global tariff war. And we saw a 10% baseline tariff slapped on all countries. Now, back to Nigeria, we saw Nigeria, I think that was 14% tariff on Nigeria. Now, Nigeria, of course, exports oil to the US, and oil is a major
Export,
at least to the US. Oil is a major export to the US. Now, what's the implication of this on Nigeria, given that we're already struggling with a lot of a lot of domestic issues? What's the implication of this tariff on Nigeria?
First of all, I like to look at how I perceive this whole crisis in terms of the impact it's going to have on countries.
Yeah.
Their economic classification of countries, whether you're looking at developed, underdeveloped, and developing economies.
Yeah.
But in terms of global commerce, I like to see countries in terms of feeder nations, countries that provide basically raw materials to the global ecosystem of business, countries that solely provide raw materials. And then there are countries that transform these raw materials into finished goods. And then there are countries that create the market for the finished goods. So most of the emerging market, including Nigeria, fall into the classification of feeder nations, countries that provide the raw materials.
Yeah.
So the tariff to me impacts more directly. The first order impact is on countries that are involved in transforming these raw materials into finished products, which is why you're seeing that a lot of discussion is being had around China, Mexico, Vietnam, the Asian countries. Where these countries are largely industrialized, involved in the transformation of raw materials into finished goods. So Nigeria as a country would not have a direct impact, much of the direct impact as a result of this tariff, because we have little export of finished goods to the US, which is where most of the attention is. But for a country like Nigeria, you're going to have a third order impact in terms of the outcome of all of this crisis. Are we going to see a global recession? If we see a global recession, it will hurt a country like Nigeria more than even the developed markets. What is the fate of the price of crude? These raw materials that are exported to the industrialized nations. Today, we are seeing oil price down to about 65. Our budget, the benchmark price for the Nigerian budget 2025 is 75. So if the oil price comes down to 65, then the country will find itself in a very uncomfortable position. So for Nigeria, we're going to see a second-hand impact, so to speak, from all of this. And for me, it's going to be, I just hope this whole tariff issue is resolved. Because if it's not resolved, it's likely going to be bad for us. Because you're going to see a slowdown, even for a country like China, that we depend on as an alternative to the US market. If the Chinese economy starts to struggle, then it becomes a problem for a country like Nigeria. So like I said, I hope this whole sense comes into the equation. And then they start to cut back on these tariffs. Otherwise, if we see a recession, it's going to be bad for Nigeria. It's going to be, initially, it always looks like we're immune to it. The stock market will probably be thriving, but once you start to see a global slowdown, oil price starts to tank, then because oil price has a strong correlation with level of economic activity. If economic activity starts to slow down globally, less people buy crude and the price will start to come down. And OPEC today is committing to an output increase, which is bad for us.
So while we're on the topic of oil, last week we saw a major move or a major shake-up in the NNPCL, where we saw a reconstitution of the board, and the former board chairman, he was the CEO, if I'm correct, Mele Kyari, was sacked by the president, and we now have a new board, I think an 11-man board in the NNPC. Now, I think my whole question around this is, some reasons we are given in terms of, reasons we are given for the reconstitution. But my question is this just going to be a symbolic move by this administration?
I think it's far from symbolic, because
are we going to see a major transformation? Because now we're talking about oil and the impact all of this is going to have on Nigeria, specifically on oil production and revenue from oil exports, right? So is this going to be a major transformation, basically? Or are we going to see, a symbolic move by the government? Is it just a symbolic move?
We've all known that the Nigerian oil industry needs a serious makeover. We all knew this. And one of the worries I had about the industry is the fact that now we've gone from a government-owned institution to it's in the process of being transformed from a government-owned institution to a privately owned institution.
Yeah.
But my worry all along was most of the decision makers were carryovers from the era of being government owned.
Yeah.
It was a major concern for me. People don't change overnight. Mindsets don't change overnight. And I mean, the outgoing board, they've done a lot in terms of getting us to where we are today. They led the privatization of the NNPC, the transformation of NNPC to NNPCL. They led all of that. But, I think they've run their course. And at this point, we need more industry brains, people that have a more commercial mindset.
Yeah.
At this point, that is what NNPC as an institution, as a private institution, needs. People who are more business oriented than people who are have the socialist orientation.
Yeah.
So I think it's the right move, but we have to wait and see how all of this shakes out. But in terms of what we've been talking about, which is the position of the global economy, I think this change happened at the best possible time.
True.
This is the time where we need people who are more aware, people who are industry players, people who understands the industry very well, people who have managed businesses. I saw the former managing director of Seplat Petroleum is part of the board.
Yeah.
And you have a lot of experienced technocrats on that board. So to me, I think it's the right move. Now, how all of this plays out depends on the attitude of the government, because as of now, I think government still remains the largest stakeholder in NNPCI. What level of government influence are we going to see? If we are able to successfully transform NNPCL to a truly private institution that's answerable to the public, that is more business oriented, then I think we should hope for the best from these changes.
Okay.
Yeah.
All right. So and just going off what you said, I think this administration with this move, right? There's a lot of expectation from this move of restructuring the whole board. There's a lot of expectation for them to deliver, because of course it's going to reflect on the administration. It's going to come back on the administration
and the country itself.
Exactly. So what we expect is that we're going to see major transformations across NNPCL. Now, we also saw over last week, we also saw JP Morgan. It was one of the news that sort of got people excited about JP Morgan expanding their operations. They already had a business I think
representative office.
A business representative office in Nigeria. So over last week, we saw news of them seeking a merchant bank license with the CBN. Now, given JP Morgan, the strength of JP Morgan, and it's a very big bank, right? And this is sort of an entry into the African. This is their first entry into the African markets.
No, they have presence in South Africa.
Okay, in South Africa.
Yeah.
So we're looking
and
at.
I think Kenya. I think they have presence in Kenya.
Okay. So what does this move mean for Nigerians? And of course, we're now going to see major competition with our local banks or domestic banks. So what does this move mean?
Well, I hope they follow through on it, because you look at a country like Nigeria, one of the biggest market in Africa, and you wonder why we do not have the presence of any of the global banks in Nigeria. We don't.
Yeah.
And it tells you about the attractiveness of the Nigerian market as a whole. and why the Nigerian financial system has kind of been isolated from the global financial system. There's a lot of isolation. There's a lot of barriers if you're a Nigerian businessman and you're trying to um, um, trade globally. So most businesses have to deal with all these technology firms, that process payments,
Yeah.
So it hampers big business operations, So I think for me, the positive here for this move is for really big corporates, big institutions, because with the coming of JP Morgan, they're going to compete at a high level.
Yes.
I do not think they're coming to compete at the retail level. Their target is likely institutional investors and high net worth individuals, and it will not allow them to be able to grant loans, foreign currency loans to large institutions, which Nigerian banks have struggled with.
True.
Because you talk of FX liquidity for with Nigerian banks, it's not strong. But with the entrance of a bank like JP Morgan, you're going to see improved FX liquidity, not just within the banking system, not just within the Nigerian credit market, but just for the entire Nigerian economy. We're going to see improved FX liquidity.
Yeah.
And to me, that could lead to a stronger performance of the Nigerian naira.
I was going to come to that
against the US dollar.
Yeah.
So it's a positive, and I hope that they follow it through, and not just stop at the level of getting a merchant bank license, but also get into the asset management business, because JP Morgan is an investment bank, basically.
Yeah.
It's an investment bank. But not much of that presence is felt with their representative office in Lagos. Not much transaction goes on with that, But I would love to at least let them come in with a merchant banking license, and let's see how it helps large businesses improve FX liquidity and overall help with the ongoing reforms within the Nigerian monetary system.
Yeah. I mean, like you said, we hope they follow through, because at this point it's still everything. I think everything is still in the pipeline. If that explains
they said in matter of months.
In months.
Yeah.
Oh, well, let's see how that plays out. Hopefully they get that license and then we can go from there. Now, we've highlighted so much on all the uncertainties in the market. I think I'm going to go back to what we were talking about earlier about investors and how to deal with a lot of these uncertainties, especially when it comes to your portfolio, right? So now we've gone past the first quarter of the year. We're in the second quarter, and I'm sure a lot of people. So this is a time where some people also restructure their portfolios or look at their portfolios and see if there are reallocations to be made, and just general changes to be made to their portfolios, given that it's the second quarter, and also with the uncertainties we've seen in the global capital markets right now. I'm very curious as to how your asset allocation looks like for the rest of the year. So we're looking at Q2, Q3, and Q4. What does your asset allocation look like, taking into account stocks, bonds, money market funds like the treasury bills and the likes?
Okay, really not much has changed, because I always preach stability.
Yeah.
You don't jump off the ship at every slight threat. You don't jump off the ship. But what we do owe ourselves as professionals, as people who take decisions on behalf of other people, is to always assess every new information and see how it impacts portfolios. And since the last 3-4 years or 5 years even, I do not think that I've seen a trend that I expect to impact asset allocation as much as this whole tariff issues.
Yeah.
But to me, it's not yet time to hit the alarm button. It's still time to keep your ears to the ground, assess the situation, take every new information seriously. Because one thing we're always guilty of as professionals is that you have your beliefs, your set of beliefs.
Yeah.
New information comes. If they don't conform to your line of belief, you underweight them. You ignore them almost.
Yeah.
But this is time to not ignore any new information, whether they align with your set of belief, your investment philosophy or not. So at this point, not much has changed in terms of my personal asset allocation. Not much has changed from the beginning of the year. I mean, at the beginning of the year, I had what you can see now, 20% in corporate Euro bonds, 20% in sovereign Euro bonds, 35% in equities, 10% in domestic bonds, 10% in treasury bill, and 5% in domestic equities. But at this point, most of that allocation has remained the same, except for the increase in domestic bonds.
Okay.
Against a slight reduction in foreign sovereign Euro bonds. And at this point, this is building in the stability we've seen in the domestic foreign exchange market. We've seen a lot of stability. And to me, this is kind of rewarding that effort, even though I do not think at this point that we're out of the woods in terms of exchange rates.
Wait, let me get, so your, what do you call it? Your domestic bonds. Are you talking about your domestic bonds and then Euro bonds?
Yes.
Okay, so which went higher?
I'm raising the allocation to domestic bonds, Naira bonds.
Okay.
Yeah, I'm reducing
Euro bonds. Okay.
Yeah. At this point, just slight reduction.
By how many percent?
Just 5% reduction.
Okay.
Yeah. So you're seeing sovereign bonds down from 20% to sovereign Euro bonds down from 20% to 15%. Domestic bonds up from 10% to 15%. That is just the only change at this point.
How about corporate Euro bonds?
Remain 20%.
All right. So, given your asset allocation, I also want to know stocks, 5 stocks you be looking at, given everything going on globally, 5 global stocks that you'd be looking at, or maybe tilting your portfolio towards.
Yeah, it's really a difficult time to tell anyone not to panic.
Okay.
When it comes to the stock market, it's difficult to tell anyone not to panic at this point. But then, like we highlighted earlier, there are bound to be opportunities out of this whole thing. All companies will not be impacted the same.
Yeah.
And before now, we had always preached holding a global type of portfolio, a portfolio that is invested globally because of the peculiarity of business today. Most companies are global companies, and I see opportunities still. So about 2 weeks ago, we talked about Costco. With their scale, Costco is a company that, to me, they have the ability at this point to negotiate with suppliers, vendors, whether in the US or outside of the US, and still be able to provide their customers with best-in-class pricing. So I'll be looking for any pullback for Costco.
Yeah.
But in terms of my broad allocation to the equities market, not much has changed. Again, not much has changed. But, I highlighted that in all of this, you need to pay attention to where opportunities are. Then you look at a company like Amazon, the price has really tanked the last couple of days.
Yeah.
It's down from 200 level to 100 and something level. I think the last time I saw it was around 170 something, if not lower than that already. So you're looking at a company like that. How have they fared in the past when we've had, whether you're looking at the COVID pandemic or the global economic crisis back in 2007, 2009? You look at a company like Amazon, they actually grew sales significantly during those periods.
Okay.
In 2020 and in 2000 and between 2007 and 2009, they actually grew sales. So I trust their management, to get through all of this and emerge stronger. So I'm looking at any pullback in the prices. Then going internationally, I look at a company like Mercado Libre, the Amazon of South America. So somehow I'm looking a lot at that e-commerce space. So I'll be paying attention to any pullback in Mercado Libre for opportunities to add. Then a company like Microsoft too, So these global companies, to me, I trust their management to get through all of this and still have the ability to grow sales. And, the opportunities for me will be more in terms of improved valuation as a result of these sell-offs that we've been seeing.
Yeah.
So I'm looking at this and locally, I'm looking at a company like GTB. To me, is the most efficient bank in Nigeria. And I expect that interest rate through all of this will likely remain high as we start to see a higher risk rating for the emerging market. Rates are likely to remain high, which is a good thing for the Nigerian banks. So I'm also looking at a bank like GTB. If I were to see any pullback, it could be a buying opportunity.
That's a tall order.
Yeah, but I think the major thing is, like you said, this is not an investment advice.
Exactly. And I think it's very important to point that out. This
particular holdings, these particular stocks I'm looking at them in the context of my own portfolio. So if you're watching out there, I don't know what your portfolio looks like. So you don't just jump out and buy any of these names.
Yeah. That's true.
But this should be like a pointer to how you can assess the whole situation and see names that you can add to your portfolio to achieve a better diversification across industries, across countries. Yeah. So to me, this is what these are names that I think I will be looking to add within this next quarter. But in terms of people watching out there, I don't know what your portfolio looks like. You need to understand how any new addition affects your portfolio in terms of reducing the overall riskiness of your portfolio. I think people should be looking at how risky their portfolios are at this point.
Yeah.
How vulnerable your portfolio is. If you're excessively invested in very vulnerable stocks, like you look at semiconductor, Taiwan was slammed with a 32% tariff. Yeah, which will ultimately hurt the semiconductor industry. Some of these other tech names that could be very vulnerable, you can look at them. I mean, there are names like Meta that I think may come out stronger out of all of this because they've got the customer base and all of that. So you have to look at overall riskiness of your portfolio before you make any new additions. Even as you are taking advantage of the opportunities in the market today, you have to look at the overall riskiness of your portfolio and see how you can reduce that. And one thing I need to point out again is some of us, personally, I don't like holding cash. I believe that cash at every point in time should be deployed.
Yes.
But there may be some argument today to hold some cash or to hold off, investing until we get clarity as to where all of this is headed. Because if we are going to see structural changes in how business is done globally, then you may want to have more clarity before you jump in.
So will you be holding more cash?
Very difficult. Very difficult. I'm always like 95% invested.
Yeah.
I'm always like 95% invested. But I said there could be some argument to hold cash. Now I haven't made up. I'm not at that point where I think holding cash is necessary. But people need to assess the overall riskiness of their portfolio. And one other thing I need to mention is people who have margins.
Yes.
People who have borrowed to buy securities. It's a good time to pay down those margins because things could get worse from here.
Yes.
And you'll be forced to sell those stocks at a deeper loss,
yeah,
which compounds your losses, except you have cash to cover those margins when the call comes.
Yes.
So I think at this point, people should be careful because one thing that could push the market even lower beyond the tariff is margin accounts.
True.
If brokers suddenly start increasing their margin, if start making more margin calls globally, then people will be forced to sell, and prices will keep going down the more.
Yeah. So I think it's very important from what you said. At the end of the day, I think it's always what we say that before you make any, it's a time to make some decisions, right? Some difficult decisions, but it's a time to make some decisions when it comes to your portfolio as an investor. So it's one thing we always say that before you make any decision, if you're not, if the best thing to do is to consult an investment advisor if you feel you can't take those decisions yourself, or if you don't have the necessary know-how to take those decisions yourself, then you should consult an investment advisor so that you can look at the entirety of your portfolio and make decisions based on your portfolio, your individual portfolio, not necessarily based off what every other person is doing. So that is very important, and it's also what we preach, that whatever information that we share in here is for information purposes only and should not be construed as an investment advice. So thank you so much, Nathan, for coming on this episode with me and analyzing the activities of the global capital markets in the past week. And to all our viewers, thank you so much for being with us on this episode. And if you've watched to the end, we would want you to subscribe, like, share, and also click the notifications button so that you can be aware or notified when we drop any new episode. Nathan, it's been good to have you.
Yeah, it's been great. And hopefully we'll come out of this better. Hopefully the world is able to avoid a recession.
That's the hope.
Yeah.
Till next time. See you.